Hey, welcome back everybody. My name's Anthony. Now, if you're new to the channel, I'm just your average guy. I like looking at the financials of companies. I like doing stock picking, and I like to try to find out if a company is over or undervalued based on their financials. Now, occasionally I also like to do some other content, some general stock market type content and just talking about different topics. And in this case, addressing what sort of mentality I feel one should have in our current stock market conditions. Now, in this video, I'm going to talk about two things that I feel are definite no-nos and absolute don'ts, well, in my opinion, in any market, not just because we're bearish, but two don'ts in any stock market. So one, the first thing you should never do, regardless of stock market conditions, is invest money that you cannot afford to lose. I don't think I can stress this enough, especially based on current market conditions. The stock market has seen a lot of red days in a row with only small little reprieves of green. We've seen a lot of stock market volatility, and you really have no idea just how low the stock market can go and how many more red days we can have. And let's be honest, even if the market is more bullish, you should never invest money that you aren't willing to lose. When I invest in stocks in the stock market, I invest for the long term. I have no intention of touching that money at all in the near term. And guess what? Part of the reason I don't have to touch it is because it's money that I can afford to lose. It's money I invested that I knew I could invest and I wouldn't have to touch. After I pay all my bills for the month, I can put food on the table, I can pay for my gas in my car, I can pay my mortgage. After you do all the things that you're obligated to do, whatever the excess is that you can safely afford and afford to lose, that's what you can invest. Never invest what you can't afford to lose because you're trying to make some short-term gain or whatever it is you think you're doing, because it never ends well. You must be unemotional when you're investing in the stock market. And those who cannot afford to lose what they invested tend to be a little more emotionally attached. Okay, the number two don't is do not invest on margin. Now, I'm going to make the argument that you should not do this in any kind of market, whether it be a bull market or a bearish market. But I'm especially going to make the point you should not be investing on margin in a market like this that's looking more bearish and a lot of volatility and a lot of red days, and we don't really know where things are going. And for those who don't know how investing on margin works, basically is you borrow against the equity, typically the equity of your stocks. So you're borrowing money from your brokerage that you're using, and you're borrowing that money against the current equity of your stock market portfolio. They allow you to borrow on margin, but that is something that you are required to pay back. And you get charged interest as well. Now, for some people, this can end up working in a bull market because maybe you see a short-term, short play opportunity where you can borrow that money on margin here, and then if the stock goes way up, then you sell to make a short-term trade, and basically you pay that margin back and you pocket the difference. The problem is there's really no play on margin in a market like this that we're having right now, because you don't know how far down stocks are going to go. So if you're trying to time the bottom of this bearish market or this market that's in the red and going down, thinking, oh, I'll borrow against margin, and then I know it's going to go back up within the next month, and I'll pocket the difference, and I'll pay the margin back. That sort of mentality of not investing, but gambling is going to end up losing you money. So this is definitely not the market to be investing on margin in. Now, I will argue that even in a bull market, you should not invest on margin. In a way, it's really just a form of gambling. You don't know if your bet is going to pay off in the short term, where you can sell and pocket the difference and pay back that margin. There's a chance you have to sell at a loss and pay back that margin, and that really sucks. Again, to me, it's just another form of what we talked about before. Investing money you can't afford to lose. Well, now you're just borrowing money that you probably couldn't afford to pay back. So if things go down enough, and let's say you invested on margin and you lost like half the value of that stock, you have to pay back everything you borrowed, and you may not be able to afford to do that. So again, let's recap. The two things you definitely don't want to do, especially in this current market volatility we have. One, don't invest money you cannot afford to lose, because then your emotions are going to get tied up as you see the stock potentially going down more, and you're going to want to sell, and then you'll sell at a loss. You always lose when you invest what you cannot afford to lose. And two, do not invest on margin, especially in a market like this, because you really don't know where it's going, and chances are you're going to get burned and lose. All right, everyone. Thanks for hanging out for the video. I hope you enjoyed watching and found this content helpful, and I will see you in the next one.